This is Tuesday, May 2nd, 2023, S&P 500 futures 5-minute chart. Now, as you can see, we've got a streak forming on the first 6 bars of the day after a gap down open. Look to the left, we've got some downward action. However, a possible wedge, 3 pushes down. This does not look sustainable. So let's see this through and see what happened next. We got a strong bear breakout, but every breakout had tails on the bottom and kept getting dojis like this. Dojis are usually a warning sign that the trend will end soon. So we've got 8, 9, 10, 11, 12 consecutive bear bars. That's a lot of bear bars. And then we got 13, a big bear bar closing on its low. So this is clearly a trend from the open. However, with the possible wedge of any of these, this does not look sustainable. The question is, will the trend continue? Typically a trend that's strong enough to last all day, the key characteristic is small orderly pullbacks. Now look, small orderly pullbacks, 1 bar pullback, 1 bar pullback, 1 bar pullback, or the bear case, 2 bar pullbacks, 2 bar pullbacks. You get 1 and 2 bar pullbacks. It's a sign that the trend is sustainable and strong and is likely to last. The examples that are unsustainable are parabolic or look like trading range price action that are just kind of messy with a lot of overlap and big tails and inconsistent follow through. So let's look at the chart. This is just straight up parabolic. And if we measure from the top to the bottom, by bar 12, we've already went down 50 points. So what are the chances that we will bounce? I think it's pretty high. However, we got another bear bar and another bear bar and another bear bar and another one. And they just kept going. Now by bar 18, there's a 90% chance of either the low or the high of the day. So it looks like we actually found the bottom of bar 18. However, 20, another bear bar. And then 21, another bear bar. And then 22, 23, 24. 24 consecutive bear bars. Now, as this was happening, I did not know what to do because I've never seen this before. So the question in this video is specifically, what do you do about a 24 consecutive bear bar streak? But the deeper question that's more applicable to most days is, what if you look at the chart? What if I look at the chart and see something you've never seen before? What's the right thing to do? The right thing to do in this case is trade what you see. That's usually always the right thing to do. And so you just get short. But this is so unusual. The best thing to do would be to actually do nothing. He pointed to a streak of 19 consecutive bear bars, and he said that it's the first time in many years that he's seen that. It's actually 25 consecutive bear bars without a bull body. And that's extremely climactic. He calls this unusual, unsustainable, and climactic. So the first thing is, the read was right. It was unsustainable, and I chose to stay out and wait for a move in a different direction or something else. However, what I messed up was that I thought that after we got this bar, that would be trend continuation because that's technically my setup. And so I failed to put all the probabilities together in a way that actually works. When this bar here bounced, right, and failed to close below its midpoint, we just reversed up for the rest of the day. So this was actually a buy, not a sell. And what he said, and what Al says here, is expect 2 legs up soon and a possible bull trend. And that's how you trade 25 consecutive bear bars from the open. However, the bigger point here and the real takeaway is, if you see something you don't know what to do, don't trade it. The market is not a place to experiment. The market is a place to execute on what you already know, and that's what your job is. And unlike most other things in this game, what you don't know can really kill you. So you have to be very respectful of uncertainty and only take trades based on your predefined strategy with signals and setups. And bottom line, if you don't know, don't go. Setup plus signal or don't trade, period.